Hello, welcome back to another video. Please like and subscribe, it really helps out the channel. Today we're going to be talking about compound interest. According to Einstein, compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it. This is an apparent quote from him maybe 70, 80 years ago. The eighth wonder of the world is now Angkor Wat, but maybe compound interest is therefore the ninth wonder of the world. On days like today, where the S&P 500 is down 1.5%, same with the FTSE, the fear gorge spikes as Israel threatens retaliation. Geopolitics creates market volatility, and also things like interest rates. If we forget about that for a minute and see what investing can return over the long term. So as you can see, the S&P 500 down 2% over 5 days, 1.84% over the past month, but up 15% over 6 months. So all this fear about plunging stock markets, well, it's just to get headlines. Over the year, up 22%, 5 years, 72%. An all-out return of over 3,000% since 1984. So that's the last 40 years, the stock market has returned 3,000%. If you put in £159, it'd be now worth £5,067. And this is not including reinvested dividends, which the S&P 500 I think is currently high 1%, but it normally is between 2 and 2.5%. The S&P 500 has returned an average of 10.26% annualized return since 1957, while the average annualized return since inception in 1928 through to December 31st, 23 is 9.9%. What happened over the last 100 years may not be reflected in the next 100 years, but this just shows that you should forget the noise and invest regularly, dollar cost average, pound cost average. If you use a compound interest calculator and you want to become a millionaire by the time you retire, you've graduated from your job, you graduated from uni, you're 21, you want to retire by 66, which is the current UK state pension age. So that's 45 years worth of working. You start with an initial investment of £200 at 8% interest. So I've used 8%, not 10%, to reflect real-time money in 45 years' time. So presuming 2% inflation rate, although this could be 3%, who knows. Depositing £200 a month would equal £1 million after 45 years. I don't know about you, but I think that's a very healthy figure while just investing £200 a month. Of course, some people might find it hard to set aside £200 a month each month investing, but a lot of you would be doing that anyway in your workplace pensions. Therefore, I would urge you just to look into your finances and try and find this a couple of £100 at least to invest every month. Of course, this isn't financial advice, but the stock market has shown over the last 100 years it has created real wealth over time. By investing £200 a month, it will take 19 years to get to your first 100 grand. And as Charlie Munger says, the first 100 grand is the hardest. To get from 100 grand to 1 million will only then take 26 years. The next 100 grand will take only about 6 years. Then 100 grand after that would only take 4 years. The first 500,000 would actually take 36 years, but then the second 500,000 will only take 9 years. A 10k initial deposit, then that is nearly your first four years sorted straight away. But it's also important maybe to spread that out and drip feed it month by month, just to avoid that market volatility. Real wealth is created by investing as much as you can as early as you can. Perhaps you're age 40 and you want to retire by the age of 65. You haven't started investing, so you're worried. Your retirement hangs in the balance, but you're thinking about buying a 5-year-old, maybe 7-year-old Golf GTI for £10,000. I don't know if that's correct. My Golf's 20 years old. So this Golf costs 10 grand, but you can buy one that's 15 years old for 3 grand. So you decide, okay, actually, let's buy the £3,000 one. That means I've got £7,000 left over. I can put as an initial investment into the stock market. At the average market return minus inflation of 8% over 25 years, depositing £1,000 a month, you can become a millionaire by the time you've retired. Of course, these figures may not be suitable for you. You may have more deposits. You may have more that you can invest each month. But I know for the majority of people, this is not the case. But I urge you to have a look at your finances and find where you can cut back down on and start regularly investing, even if it's just £50 a month or less. A gym membership, £30 a month. Have a look at the compound interest calculators and see what you can achieve over a 25 year period. Remember, opportunity cost is the foregone benefit that would have derived from an option other than the one that was chosen. Buying a nice car might be important to you, but is it as important as your retirement? As retiring earlier than 65, maybe you want to retire 5 years earlier at 60, is it as important as having those extra 5 years, 5, 10, 15 years of a comfortable retirement, seeing the world? Maybe it is. Maybe the car, having a nice car, is your rich life. Maybe that's what you want. But consider the alternative. Anyway, thank you for watching. The next video will be on a individual stock. There's been a few companies that have got onto my radar that I've been looking at, but I have yet to do a deep dive. So thank you for watching. Please like and subscribe. See you on the next one.